Welcome to this week's version of Nichols and Dimes, our weekly video series. Today, I'm going to be talking about the current status of the stock market. We've seen this recent or a very small correction, a downturn, and we have seen in the media a lot of concerns about, is this market rally since the March 2020 lows over? So no one really knows, but what we can do is look at a few areas of the market, specifically the big tech companies, to give us an idea of what may happen going forward. So the companies I'm talking about are in particular the Fang Stocks, that is Facebook, Apple, Amazon, Netflix, and Google. And you could also throw in Microsoft in there as well. Now the Fang Stocks, if you have been paying attention, have been one of the best, some of the best stocks to invest in over a long period of time, and in particular since this rally off the March 2020 lows. Now, these stocks make up about 20% of the S&P 500. So you could see, because of their massive size, how much they affect the the S&P 500. In fact, all of them, with the exception of Netflix, have over $1 trillion valuation. So those particular stocks can give us, again, a clue on where the overall equity markets are likely going to go from here. So they've had a bit of a recent correction. So let's look at the, you're not going to see this, but I will see this. Let's look at each stock individually, and then we can just give you our 2 cents on where we think the markets are going to go. So Facebook, again, it's I think it's the world's largest social network. Billions of users, have been one of the best companies to invest in the long term. Again, it had a recent pullback. It's holding what we would term as support above what's called the 50-day moving average, to get into a little technical jargon. So again, it's probably going to hold support here, and there's a reasonable chance it heads higher. Let's look at Apple. Apple, again, one of the best stocks in the marketplace, has been for years. People who love Apple, love their iPhones, love their products. Again, Apple just hit actually new all-time highs, found some support just above the 21-day and 50-day moving average. Again, to the extent Apple heads higher, we think that overall equity markets are going to head higher. Let's look at Amazon. Amazon is the second largest retailer in the world, behind Walmart. Amazon for a while was in a long-term trading range, but actually broke out above about the about $3,400 to $3,500 level. Had a recent run up, and then obviously had a pullback. Again, found support at what's called a moving average, which are basically indications of strength and weaknesses, in a specific stock or industry or indices. Let's look at Netflix. Again, Netflix is not as influential because it's a $1 billion company, but it's not one of the $1 trillion companies that necessarily affects investor sentiment. It's been in a long-term trading range, but again, I would say this is probably one of the weaker of the group. Let's look at Google. Google, one of the best stocks in the marketplace, in particular, since it went public many years ago. This is one of the best stock charts you're going to see in a while. Tends to find support at the 21-day and 50-day moving average. And then last but not least, let's look at Microsoft. Microsoft's chart looks beautiful as well. If I'm going to look at a picture-perfect stock chart, has found support at important moving averages as referenced before. So all that to say is the key, or at least we think one of the clues, if you will, to determine if the overall equity markets are going to continue higher is looking at the individual action of these particular stocks. So all that to say is these stocks look like they have a healthy pullback, are finding support, and look like they all want to head higher. Again, one of the things we do, of course, is talk to clients and new prospective clients all the time, and one of the questions we always get is, are we at a top? How long can this market rally last? And hey, I have some cash on the sideline. Should I put it to work? So If you don't want to put to work right now all at once, we'd recommend something called dollar cost averaging, which ultimately the goal with dollar cost averaging is to have your average price, your average cost be less than your average price. So if you want to deploy a dollar cost averaging methodology, you can do that. Or of course, if you're maybe more of a risk taker, you could put all your money in at once. But again, to give you a short-term view of where we think the equity markets are going to go higher, based on these Fang stocks plus Microsoft, it looks like this overall equity market wants to head higher. To that end, if you would like a second opinion on your overall portfolio or financial situation, you could send me an email at cnichols@nicholswealth.com or go on our website at nicholswealth.com to learn more. Thank you again for watching. Have a great day. Bye-bye.